Polycab, that's the buzzer. In fact, holding up in trade, spurt up after its numbers also came out. Inder Jaisinghani, the chairman and MD at Polycab, and Gandharv Tongia, the ED and CFO, both join in on the show right now. Gandharv, if I could start off the discussion with you, you've seen a very strong growth of about 42% in the first quarter. Tell us a little bit about the sustainability of this kind of a growth run rate and what sort of domestic volumes do you hope to clock?
So the domestic business has registered a fair amount of growth in the current quarter. Both institutional and channel, which is distribution business, have registered a growth. As far as exports is concerned, that has also registered a growth of almost 80-90%. Exports now contributes almost 9% to our top line. If we talk about the domestic business, all the regions have registered growth. In terms of value and volume, most of this growth is actually coming from volume. Volume growth, depending on the product categories and view, would range anywhere between 50% to 60%, and which is translating into almost 42% growth at the company level and 47% growth in cable and wire business level. The difference between the two is because of softening of commodity prices, which has resulted into price reduction for our end customers.
Right, and Mr. Gandharv, if you could also share the volume growth number?
So depending on the business category, it would range between 50 to 60%. You would be happy to note that this was the best ever first quarterly results of the company, both on the top line as well as bottom line. So we have achieved best top line without compromising on profitability, and the EBITDA percentage was almost 14%, and the PAT was almost 400 crore rupees, which was almost 81% growth year-on-year basis.
Right. Inder, given that you are a proxy to the real estate sector, how is it that the demand trends are shaping up, and do you see this kind of growth to continue?
Yeah, demand is going to continue because the demand both in building construction and the demand of the infra and industries expansion all are in a very, very fast way today. But everybody is feeling that demand is going to come much, much more. So we want to be ready also. So even the construction in a BC class cities and town is going to continue in the same speed.
And Inder, how is the demand trend for tier 2 and 3 cities?
No, 2-tier and 3-tier on the contrary, demand is increased, and it is going to increase because everybody is looking for to buy a house, and everybody looking for a good quality of the house today, and everywhere infra is going to be full-fledged. Our central government also investing a lot of money, state government is investing a lot of money to see that how the best infra we can provide to the countryman.
Right. Gandharv, what explains your massive outperformance vis-a-vis the industry growth averages? Was there any pre-buying or a one-off that explains this kind of Q1 number, and is it sustainable then?
As you know, we embarked on a project by the name of Project Leap almost 2 years back, and most of the strategic initiatives have been implemented in the last 2 years. We are reaping the benefit of those investments which we have made. We have revisited our GTM, we have reworked on our digital and processes, we have re-engineered our product portfolio. We are trying to get closer to customer, trying to get insights and investing a lot of time in new product development. All of these things are helping us in achieving a better set of numbers. And as Inder bhai mentioned a while back, the government spent both at central level and state level, plus the private Capex, which has improved over the last 7-8 quarters, is also helping us. So macro is good, and the execution capability of the company has improved over the last 2 years, and that is why we have been able to register this type of growth. We had earlier guided for 20,000 crore rupees of top line by fiscal 26, and we believe that sometime later this year, we'll have to recalibrate that guidance.
Right, and you had highlighted as well soft consumer demand. What kind of demand trends are you looking at? Is there an improvement in that?
FMEG demand is basically, we are not reached at the whole level of the network of the India. We are basically now little strong, little western, and we are increasing our network to basically whole part of India, looking for a south, east, north, and northeast, and the every portion. And I think so within coming, which we are working now, we are working very hard on a focus on 2-3 states now. So looking to that, I think so within 4-5 years, we can reach the level, because demand is good. Demand is not a problem. Problem is that we are not on the ground on every place. So we will reach now in the ground within coming 5 years. I think so. Huge scope is there in FMEG, and we got all product ready. We got a manufacturing capacity, and again we are increasing manufacturing capacity, and also how to reach to the every nook and corner. We already keep making the team total together, and I think so we'll grow by every year 20-30%, but we'll have a very good big jump in coming 4 years.
Right, Gandharv, the FMEG segment has continued to report an EBIT loss. So what is the outlook then here for this business on the revenue and margins front?
Before I comment on the margins, let me give you a bit of a color on the earnings. The quality of earnings of FMEG has improved considerably if I were to compare with the June quarter of last year. Till last year, we were doing business on credit. That means we used to give credit of 60 days, 90 days to our dealers and distributors. We have completely stopped that. Today, our FMG revenue, generally between 80 to 90%, is either operating on channel financing without any recourse or on advance basis, and which is a significant improvement because it makes our business sustainable, and we have good visibility of secondary as well as tertiary sales. As far as margins are concerned, as part of Project Leap, we had guided that we will get to around 10% of EBITDA margin by fiscal 26. And we believe that momentum should start in the current fiscal itself. In the following quarters, we should see growth, both on top line and better margins. And then from this year onwards, every year we should be able to improve on margins so as to get to 10% by fiscal 26.
And Gandharv, what about the overall EBITDA margins? Does 14% look sustainable, and any target that you've got internally?
So as part of Project Leap guidance till fiscal 26, we have been guiding a range of between 11 to 13%. Considering the leverage benefits, we can assume that range can be slightly improved to 12 to 14%. But no substantial improvement is expected in EBITDA margin beyond what we have already delivered in the first quarter.
Right. Gandharv, the international business has seen an 88% year-on-year growth and, continues about 8.9% to your business. Is this growth sustainable, or you think it's a one-off?
So exports business is sustainable business. Now we have fair amount of distribution business even in international market. We have fair amount of presence in countries like US and Australia. As a matter of fact, out of almost 9-10% of exports business, which is there in the company level, we get 50% of that from US. Last year, in the fourth quarter, the exports contribution to the top line was 10%. In the current quarter is almost 9%. We believe that in quarters to come, we should be able to maintain and improve this run rate. Exports is slightly better profitable business as of now, and that is why the company is making a lot of focus, making investment in manufacturing capacities, doing new product development, getting into tie-ups and arrangement with local dealers and distributors, and setting up warehouses. I think every quarter we should be able to add one or the other geography or a warehouse, and export should be a meaningful number by the time we reach to FY26.
So Inder, given that the company has forayed into the EHV, what is the outlook in terms of that market? Because in India, it's expected to be a 4,000 to 5,000 crore rupee market a year. What is the update and the kind of growth potential you foresee?
EHV segment is basically market is very big, and it is going to very big because of the demand of the India industry new which is coming, and everybody part of the world is looking the manufacturing setup in India. So power requirement is very big. So requirement power, every state has to convert overhead into EHV cables. So that demand is going to continue growth continuously because India is a market where a huge population is there. So we have to put more industries and more agriculture, more infra, power will require. So I don't think so. Even India has got a land looking to population. We got a less shortage of the land going to be future. So when shortage is there, we have to go for all EHV cables, and EHV demand is going to increase continuously.
Right, Gandharv, what is the update on the EHV segment as well about the plant which is going to be set up in Halol?
So we have an arrangement with Brook. Brook is an international company having decades of experience, and they are our technical partner. The manufacturing will commence sometime in 2026, and as of now, the plant is getting erected. The numbers of FY26 should have business from EHV.
Right, and Gandharv, the company has also spoken about a 400 crore rupee capex a year. What is the outlook? Are there any changes, any opportunities as well that you foresee in smart meters?
So we expect that Capex would be in the range of 500 to 600 crore rupees this year as well as in the following year. Smart meters is an exciting opportunity and the team has started working on it. We should be able to come back to you by next quarter with material updates on smart meter, but it looks exciting at this stage.
Okay, Gandharv, Inder, both of you, thank you so much for taking the time out and joining in today. Good to have you on the show as always.